Hello, my name is Paul Siegel, president of Candlecharts.com, and I just want to take you through a very brief video where I do a very quick explanation of candle charts explained, scanning for candle patterns, and specifically my favorite bouncing ball strategy. I get requested a lot from our current and existing students about the bouncing balls trade setup that I've been doing for over a decade now. So what I wanted to do is kind of explain it real fast here, and then show you an example of actually something currently going on with the market. So what I'm going to do now is I'm going to pull up a chart of a specific individual stock. And this is Varian Medical Systems. I had never traded this before in my life, but this, what you see on your screen now, is called Nissen Candle Scanner software. This is on the Trade Navigator platform. And we have this on a few different platforms, but I just happen to be doing this on my computer that I have this version installed on. We also have it for NinjaTrader, TradeStation, and a couple other versions of it. So the bouncing ball trade setup, I'll just give you a very quick history of it. I've been doing it, like I said, for over 10 years. And I look for hammers. Notice I am looking right now at a daily chart. So I scan the market using our software, scanning for candle patterns, looking for hammers. Now on this date, July 10th, just a little over a week ago from the time I'm doing this video, we had a hammer. A hammer, remember, has to follow a downtrend. Okay, so here's the hammer right here. And a hammer is a small real body with a long lower shadow and ideally no upper shadow. The real body could either be white or black or red or green, depending on whatever colors you're looking at. But again, the real body is small. The lower shadow has to be at least 2 times the length of the real body. So again, like I said earlier, I'd never traded the stock before. I never would have looked at the stock unless the software identified, hey, here's a hammer on a stock that happened to be in the S&P 500. So what I look for is a bouncing ball setup or a retest of what I call the buying zone of that hammer. The buying zone would be the lower half of the shadow of the hammer. So when I see a hammer, what I do is I draw in 2 lines, one right at the bottom of the hammer and another right at roughly the midpoint of that hammer, or the shadow, I should say. So just to make it easier and forget that we even see what happened, I'm going to delete those lines real quick just so I can make it a little bit easier to see when we look at other time frames. So again, I draw a line at the low of the hammer and another line around that midpoint. Sorry for that. Just make it right here for right now and make it easier. So I don't buy on the initial hammer. What I do is I look for a retest. Notice again, we're still looking at the daily chart. Notice we had a retest here just a couple of days later. Now, I don't buy on the retest from a daily chart. I'm looking at a hourly chart. So notice this date is July 14th that we got into that buying zone. So what I do is I flip to an hourly chart in that date and notice what we had. We had another hammer. This now is on the hourly chart. We got into that buying zone from that hammer, okay? Again, a lot of times I won't even buy off of the hourly, but I'm going to look at a 15-minute chart. So now what we have to do is go back just because, remember we were looking at July 14th, and notice what we get. On a 15-minute chart, we have another hammer, okay? So we have a retest of that buying zone, and that's ideally what I'm looking for. Now, people ask me all the time, why would we look for a retest? Why wouldn't we just buy on the initial hammer? Well, the initial hammer had already made a move. It already moved up. What I'd like to do is get in at a lower point, which what would do is reduce my risk. With lower risk, I have potential reward. Now, there's a few other things that I want to show you. Notice when I put the hash mark here, this is at the low of the hammer. If you look back, what did we have? We had a rising window, which then became new support. We had a move under it, became resistance. We had several candles right here that use it as support, became resistance, and is now support again. So we have what Steve calls all the time a change of polarity. So former support became resistance, became support even stronger. Notice we get a retest into that buying zone, and look at the great move that we had. So on a position that we entered in around the 118 mark on July 14th, jumped all the way up to close to 130 on Friday of last week, July 17th. So in just a few days, stock went from 118 to 129. Now you could either buy the stock itself, or you obviously can get into some option strategies like the simple one, like just buying a call. Great percentage gain, very small limited risk. Now, to manage the trade, obviously if we enter here and then the next day we get a rising window, we just move our stop up into that window and we lock in profits and we allow it to run. Now, people always say, where should my target be? Well, the hammer always has to follow a downtrend. So my initial target would be the most recent high, which was back here. Notice what happened the day after we entered. We actually got a move ahead and a close above that recent high. Again, moving up the trailing stop. So if we surpass that, what do we have? Well, our next target is up here in the 133 area. So all we will do is manage the trade, okay? So all this is designed to do using our software, but you don't need the software, but the software certainly makes it easier to scan for your favorite candle patterns. But the important thing is understanding what to do, how to use the candles. Notice everything else I have on this chart. I have Bollinger Bands. I have a volume indicator, and I have some moving averages down here at the bottom, okay? Notice this initial hammer was right near a lower Bollinger Band. I love when we have the low of the hammer right near a lower Bollinger Band. That limits my risk. My risk is just below that hammer. My reward, like I said, my initial target would be the recent high. Now, just because it hit my target does not necessarily mean I have to exit the position. We got to move above that, so all I did was I tightened up my stop significantly from down here below the hammer in the 115 area all the way up here to the 122 area. Anytime you can tighten up a stop that significantly, basically locking in a profit, you should be a very happy trader. So this is just one example of scanning markets, understanding how to find candle patterns, and then what to do when you actually see them. We have a lot more information about not only the bouncing ball and other items such as scanning for and understanding candles inside of our membership site at mycandlecharts.com. I'm also telling you right now that we have a very special, very limited time offer if you'd like to become a lifetime member of My Candle Charts. So go to this link, candlecharts.com/lifetime, and when you check out using code PROSPER, you will be able to find everything that you could possibly imagine in learning how to utilize candles. I want to thank you for watching this short video. If you do have any questions, please let me know. Email me, paul@candlecharts.com.